When it comes to long-term investing, especially for younger investors, growth is the name of the game. Finding an ETF that has a diversified basket of some of the fastest growing companies is all it could take to get your portfolio to see the types of returns that are doubling or even tripling that of the returns of the S&P 500. Now in this video, we're going to do a deep dive into one of the highest quality growth ETFs that have been around for a while, that has seen massive returns so far and likely has much more to give in the future. Now stick around because we have a lot to go through. Right after you, please drop a like in this video and subscribe for more future content like this. Now the ETF that we're talking about is ticker symbol VUG, or the Vanguard Growth ETF. Now VUG is an exchange traded fund launched and managed by the Vanguard Group, which is one of the biggest firms in the world. The fund invests in public equity markets of the United States. The fund invests in stocks of companies operating across diversified sectors and invests in growth stocks of large cap companies. It seeks to track the performance of the CRSP US Large Cap Growth Index by using full replication technique. Now this Vanguard Growth ETF was formed on November 2nd, 1992 in the United States of America. Now of course, technology stocks have emerged as a darling of every type of portfolio due to their consistently improving outlook and impressive returns. Pretty much anywhere you look in the market, if there's technology attached to it, those ETFs or stocks are probably making some money. But despite the robust performance and outlook, tech stock prices have a history of big fluctuations and a sudden shift in direction. And this is because tech stocks are especially susceptible to financial, economic, political, and tail event risks. This is because they have one of the highest betas of all in the S&P 500. The risk of a healthy price correction is also high considering the notable increase in forward valuations. So simply put, because of the beta, as fast as tech stocks can move up, they can also move right back down just as quick. Now if the tech sector's upward momentum continues like it's been doing for a while now, VUG's portfolio appears to be well positioned to capitalize on potential gains from here. Additionally, a number of its portfolio holdings in the big tech sector belong to things like software application and chip making categories that stand to gain significantly from the AI boom that we've been going through for the last year or so now. Now VUG is currently trading at $281.07, pretty close to the higher end of the 52-week range. The 52-week range being $203.64 as of the low and $295.07 as of the high. Now VUG is up over 460% as far as price return goes, and that's over the last 20 or so years. But for some more recent data, this fund is up over 32% just year to date alone. To be more specific, VUG was trading at around $210 back at the beginning of this year, and now is trading in the 280s, which is a massive increase. Now some more information about VUG. The expense ratio is just 0.04%. The dividend frequency is quarterly. Yes, VUG does pay a $1.72 dividend per year, which keep in mind is very small, relatively speaking, around 0.61% dividend yield. Now the AUM, the assets under management, is massive at $91.97 billion. Now some very important information when it comes to the Vanguard Growth Index. This ETF has a very high quality basket of stocks within it, and these names have a tendency to grow very fast when the market is green, of course. Now the holding breakdown is majority technology, which makes exact sense on why this ETF has so much potential to grow once again when the market turns green, with technology being 45.32%, consumer cyclical being around 16, communication being around 12, healthcare being 8, financials being 5, industrials being 3, consumer defensive being 2, real estate being 2, basic material being under 2, and energy being around 1. Now the top 10 holdings on this portfolio are very familiar names that you see in pretty much any growth ETF. Names like Apple, Microsoft, Amazon, Nvidia, Alphabet, Tesla, Meta, Alphabet, Eli Lilly, and Visa. Now VUG does have 238 different holdings in the portfolio, so for growth investors out there that want to have some massive exposure to different stocks that have a higher beta, which means when the market moves, they're really going to move, this ETF gives investors a very diversified option. Now the VUG ETF does pay a dividend. It might be small, but it's still something. The trailing 12-month dividend yield is 0.61%. And with sort of a confusing amount of dividend growth rate, meaning that the last trailing 12 months it says 22%, which is pretty massive. But then over the last 3 years, there's just a 0.18% dividend growth rate. The last 5 years, 0.65, and the last 10 years, around 4%. It's pretty certain that the dividend is pretty much a secondary thought when it comes to investing into VUG. Now, of course, one of the main questions, and for good reason, is going to be how has ticker symbol VUG performed against something like the S&P 500 historically, And we are going off a metric of total return. So this is dividends and price return included. So to give you guys an idea, over the last 6 months, VUG has returned 15.9%, where the S&P has returned around 9%. So VUG returned quite a bit more than S&P in the last 6 months. Year to date, it gets even crazier though. VUG has returned 34.18% year to date, where the SPY has returned 18.09%. So year to date, around 223 days now, VUG has almost doubled the return of the S&P 500. And keep in mind, this is during a year when the S&P 500 itself has had a massive total return. Which just goes to show that the technology sector and the holdings in something like VUG are pretty much unstoppable when the market turns green. Over the last year though, of course, when we stretch out the time frame, there's sort of a different picture being painted. Just 7.1% total return for VUG and 5.8% return for SPY. Over the last 3 years, 28.05% total return for VUG, and the SPY actually beats VUG in this time frame at 37.98%. But for the longest time frame that we have here, a 5-year time frame or 1,826 days, VUG has returned 90.38%, where the S&P 500 has returned 72.29%. So honestly, either way, if you would have invested into S&P or VUG over the last 5 years, you would most likely be pretty happy and pretty thrilled with your results and your return. But what's crazy is that in this time frame, even where the S&P has returned a lot, VUG still beat it. Now, it's no secret that over the last year or so, investors simply just love AI. And what I'm seeing in this market is that tech leaders are giving investors what they want to hear. That is going to drive investor interest and dollars into the space, even though some of the valuations might already seem pretty insane. And this is because people, investors, they don't want to miss out on the next big thing. And that is why there could be less risk for shrinking valuations moving forward. Now, an example of this, executives across Meta, Alphabet, Microsoft, and Amazon, leaders mentioned AI almost 170 times in their most recent earnings calls, according to a report from Fox Business. And let's be real here, moving forward, investors are going to want to have more and more exposure in the space of AI, which means more and more dollars are likely going to flow there. So looking at VUG's top 10 holdings, there is a lot of exposure to companies that are going deep into AI, and that means a lot of money, a lot of investors should follow. So there we have it. That's the Vanguard Growth Index Fund, or ticker symbol VUG, an ETF that offers a diversified option for investors that are looking to have some exposure to some of the fastest growing companies, fastest growing stocks across the entire stock market. Even though historically speaking, there's been multiple different times where this ETF has dropped in price pretty significantly because of the strong holdings within this ETF, it's always fought back and has always headed to new all-time highs from there. But the question I have from here is, will we see VUG go above $300 per share sometime soon here? Comment down below yes or no if you think so. If you enjoyed this video, make sure to please drop a like down below and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.